All right, we all hear about a company's bottom line, right? It's the number that makes all the headlines. But what if I told you that the most famous number in business, net income, doesn't actually tell you the whole story? Today, we're going to pull back the curtain and find the real story beyond the bottom line. So here's what we're going to do. First, we'll look past that traditional bottom line. Then we're going to find this secret pocket of other income. After that, we'll see how it all adds up, where you can actually find it in a company's reports, and, the most important part, why this number really, really matters. Okay, so let's start with a basic question. When you hear somebody say the bottom line, what's the first number that pops into your head? For most of us, it's one very specific number from the financial statements. And yep, if you were thinking net income, you're not wrong. That's what pretty much everyone focuses on. It's the profit, it's the earnings, it's the big number that everybody watches like a hawk. But here's the thing. Is it really the end of the story? I mean, is net income the true, final, ultimate measure of how a company did? The answer is a big no. Not even close. All right, so let's get into it. The story beyond net income. We've just established that the bottom line we all know isn't the whole picture. So let's start digging around for those missing pieces. And that more complete picture, it's called comprehensive income. Now, I know the official definition on the screen looks a little dense, but the core idea is actually pretty simple. It's the total change in a company's equity. You can think of that as its net worth. It captures everything that changed the company's value, with one exception, money coming from or going out to its owners. So if comprehensive income is the total change, and we already know about net income, where does the rest of it come from? Well, that brings us to what I like to call the other income pocket. Here is seriously the best way to understand this. Just imagine you have two pockets. Pocket number one is net income. That's your salary. It's the cash you earned from your job this month. It's real, it's in your bank account. But pocket number two, this is what we call other comprehensive income. Think of this like the change in the value of your house. You haven't sold it, so you don't have the cash in hand, but has your total wealth changed? Oh, you bet it has. And yup, this second pocket has an official name in the accounting world. It's called Other Comprehensive Income, or as you'll often see it, just OCI. It's the part of the story that net income totally leaves out. You can think of the main income statement as the main stage of a play, right? It shows you the star performers. Well, OCI includes all the important stuff that happened off stage. It wasn't part of the main show, but it definitely had a real impact on the company's financial health. So what's actually in this other pocket? Well, a couple of the most common things you'll find are unrealized gains or losses on certain investments, and those little adjustments companies make when the foreign currencies they hold go up or down in value. And that, right there, is the key thing to remember. These are not imaginary numbers. They are real changes to the company's value. The only difference is that they haven't been cashed in yet. It's just like the value of your house going up before you actually sell it. All right, time to put all this together. Now that we have our two pockets, net income and other comprehensive income, we can finally combine them to see what the true bottom line looks like. And get this, the formula is so simple, it's beautiful. You just take your net income from the main stage, you add in all that off-stage action from other comprehensive income, and together, that equals comprehensive income. That's it. That's the whole story. Now, there's one last little detail that's really important here. Think of it like a reservoir of water. Other comprehensive income, or OCI, that's the flow of water into the reservoir during 1 year. It's the change for this period. But then there's something called accumulated other comprehensive income, or AOCI. That's the total amount of water that's in the reservoir, the running total that is built up over all the years and just sits on the balance sheet. Okay, this is all great in theory, but where do you actually go to find these numbers? Let's go hunting for some comprehensive income out in the wild. So the accounting rules give companies basically two ways to show this to you. Option one is a single long statement. It starts like a normal income statement, gets down to net income, and then just keeps going. It adds the OCI stuff right below it. The other option is to have two separate statements. First, the regular income statement, then a second one right after it called the statement of comprehensive income. And check this out. Here's a perfect example from a real financial statement. See how it flows? It calculates everything and gets to net income, in this case, $2,125. But it doesn't stop there. Right below, it lists out the off-stage stuff, the other comprehensive income, which totals $97. You add those two together, and boom, you get the real bottom line, comprehensive income of $2,222. The whole story, all in one place. So we know what this thing is, we know where to find it, but the big question is, what's the takeaway? I mean, why does this number actually matter if you're trying to be a smart observer? Let's just boil it down. Why should you, or any investor, or really anyone who's curious about a business, even care about this number that usually gets ignored? Well, it really comes down to this. First, you're getting the complete picture, not just the highlight reel from the main stage. Second, you're uncovering those really important but unrealized changes in value. And finally, you are seeing the actual change in the company's net worth from all its activities during the year. It's just a more honest measure of performance. Maybe the best way to leave you thinking about this is with an analogy. Looking only at net income is like just reading the box score after a big game. Yeah, it tells you who won, but that's about it. Looking at comprehensive income, that's like watching the entire game. You see the big plays, the momentum shifts, the near misses. You actually understand how they got to that final score. So I'll leave you with this final thought. The next time you see some big, flashy headline about a company's amazing earnings, hopefully you'll pause for just a second and wonder, hey, what's the rest of the story? What is that comprehensive income number telling me? Thanks for tuning in.